So, you're a beginner and you've finally learned some few trading patterns and now you're excited. You want to jump straight into the markets. So maybe perhaps you've learned something like the double top, right? Or perhaps you've learned the opposite, the double bottom. And now you're ready to make some money. But a few things you do not understand that are making you lose your money. So let us talk about some few of them. So let's say the market is moving in a series of higher highs and higher lows all the way to the upside. If you know anything about this, you know that we call this an uptrend, right? Or perhaps now price finds a little bit of a resistance right there. And what happens when price finds a resistance is that it will tend to try and resist and perhaps do something like this. But remember, on the bigger picture, you need to look at the swing highs and the swing lows. Let's say price does that. And now, as the beginner you are, jump straight in, right? You jump straight in and try to get some sales here. So you try to get some sales here and try to push price to the downside. But what happens is that price comes here and does something like this and pushes all the way to the upside and you find yourself in losses. So why does this happen? This is because you're not following the overall trend. So rule number one, anytime you're trading patterns, you need to understand, is it a reversal pattern or is it a continuational pattern? So most of the time, double bottoms and double tops, believe it or not, they work best as continuation patterns and not as reversal patterns. Till next time, let us meet when you can't avoid.